Hey, what's up guys? In today's video, we'll be going over Tesla and whether now is the right time to buy the stock or wait. Now, the moment Tesla bulls have been waiting for has finally arrived. The Elon Musk-led electric vehicle maker will replace real estate investment trust Apartment Investment and Management Company in the S&P 500 when it finally joins the benchmark index after the close on Friday, December 18. Tesla will also join the S&P 100, replacing Occidental Petroleum to become the largest company ever to be added to the index. With a market cap of roughly $580 billion, Tesla will be the sixth largest company on the S&P 500, trailing only Apple, Microsoft, Amazon, Google parent Alphabet, and Facebook. Now, I know what you're all thinking. Tesla stock has already skyrocketed by more than 600% year to date. Am I not late to the party? Haven't I missed the train already? Well, the simple answer is no. Now, before you click away, give me a couple of minutes, hear me out, and then you can make your own informed decision on whether to buy Tesla stock or leave it alone altogether. Before we get into that, don't forget to subscribe to the Investing.com YouTube channel. Hit the like button as well. It'll help us get the word out about these videos, and you'll be able to stay up to date with all the latest content. Some background info. Tesla stock has been one of the best performers of 2020, with the stock up 629% to reach a series of record highs in recent weeks. It is now the most valuable company in the world, with its market cap eclipsing those of its rivals such as Toyota, Volkswagen, General Motors, and Ford. Zooming out, shares are up more than 12,000% from their IPO price of $17 back in July 2010. The insane run-up in the price over the last decade is, like all investments, a bet on the future, while some in the market are certain that Tesla is increasingly looking like the poster boy of a giant tech bubble about to burst. Others believe that Tesla will evolve into more than just a car company in the years to come. Tesla's growing solar panel and battery pack business have revved up speculation that it will eventually move into energy production and storage in the years to come. Even space travel is something investors are betting on Tesla eventually entering into. So taking that into consideration, the next big tradable event for Tesla stock is its inclusion in the S&P 500 index. While index readjustments are usually non-events, institutional and individual investors have pounced on the news, sending Tesla shares up around 50% since the news was first announced on November 16th. Now, in a sign that bodes well for Tesla, history this year has shown that 14 of the 15 stocks that have been added to the S&P 500 have seen their share price move higher than where it was when they were first added to the benchmark index, with names such as Paycom, Teradyne, Etsy, and Carrier Global some of the examples. Now, breaking down the math, there are currently roughly $11.2 trillion in assets benchmarked to the S&P 500. Of that total, roughly $4.6 trillion are parked in index funds, meaning that significant portfolio adjustments will be needed to be made in order to make room for Tesla. Some are saying that could result in $80 billion worth of Tesla shares having to be bought by index investors in order to reflect the changes in the S&P 500. So what's the bottom line? For the people that have watched up until now, congratulations. Tesla stock obviously can be both an exciting investment but risky at the same time, so don't forget that. With that being said, despite strong gains already recorded so far this year and sky-high valuations, we anticipate that the bump in demand and the forced buying resulting from its S&P 500 inclusion will likely push Tesla stock higher in the coming days and weeks. Now remember folks, Rich valuations alone are not a reason to avoid or dump a stock. In fact, much of the gains achieved in the stock market have come while valuations appeared expensive. I know more than a few people who missed out on this rally because they thought Tesla was expensive at $350 per share. Now, with shares at around the $600 level, you don't want to be that person looking back when Tesla is at $1,000, regretting not buying. In many ways, the new generation of retail day traders, which entered the market during the peak of the coronavirus crisis, have managed to change the entire character of the market. They have become a more powerful collective force than the professional investor, and they simply don't care about the traditional valuation metrics as the experts, such as PE ratios and so forth. We've obviously seen that reflected in the insane run-up in the price over the past few months. So I hope you enjoyed this video. Please leave me your comments whether you agreed with me or not. If you have any stocks you'd like me to cover in the coming weeks, leave that in the comments section as well. May the trading gods be with you. Have a good one, everybody.